All right. I'm going to start because I actually, I thought I had 15 minutes. It says 10, and it's not going, so I'm going to talk and try to get my extra 5 minutes. I also have a fair number of slides, so I'm going to go through them really quickly. Same as Rachel, if you want a copy, feel free to just ping me, send an email, whatever. Happy to do that. Oh, here we go. Excellent. All right, and my attorney always makes me put this in. It's a disclaimer that basically says, don't believe anything I say and don't make any investment decisions on what I say. Okay, Rachel covered the economy just real quick. You know, it's interesting. I'm a big headline guy, so a lot of slides are gonna, show headlines for the past 6 to 12 months. And, it's really interesting as we go through this deck, right? There's a lot of chaos out there and a lot of mixed signals, right? Think about at the beginning of the year, even before Trump was inaugurated, the economy was doing pretty well. Then we had Liberation Day, right, and the world was falling apart. Then we had some wars in between, right? And now things are kind of looking a little bit better. So, and there's good news with the economy in terms of money, investment coming into the United States, which is always a great thing. I want to take a quick minute and talk about uncertainty because that seems to be a big buzzword these days. And, these are the things that are causing uncertainty. I mentioned a minute ago: recession fears, inflation, wars. You know what? At the end of the day, us included, right? Nobody knows what's going to happen 5 minutes from now. Never mind tomorrow and a week from now. So, something to keep in mind, right? Life is uncertain, right? Crossing the street is uncertain. I heard a term recently: transitory uncertainty. Does anybody know what that means? Good, because I don't know what it means either. And then, when I look back on my life, right, one of my earliest memories is when we had black and white TV and 6 channels, that after 11 o'clock the TV went off, right, and we really had news then. The Cuban Missile Crisis in 1962, and then if you think about all the sort of black swan events that have happened since then, these were all oh my God moments. The world is coming to an end. You know what? The world never came to an end. So what we went through during Liberation Day and all the panic with the stock market, I mean, it's amazing how nobody really talks about that anymore. And then we were supposedly on the verge of World War III when, the Israel-Iran war, 12-day war happened, and we're not in World War III. So anyway, U.S. commercial real estate is a little bit of a mixed bag. Hotels, on a relative basis, are fairly favored when you compare and contrast them to office buildings. And I've been doing what I do for, like Rachel, 40 plus years. I don't remember ever that phenomenon that hotels were perceived as more favorable than office buildings. The travel industry, again, sort of a mixed review. Although on the lower right-hand side, we can see that United Airlines just issued a new forecast, and they're saying the world is less certain now, so less uncertain, excuse me. All right, the United States is going to be benefiting from some major events that will be occurring in the near future, from Olympics to soccer tournaments, and the United States is turning 250 years old. So there's going to be a lot of inbound traffic as well as Americans traveling abroad. Rachel touched upon the public companies. Again, a little bit of a mixed bag. If you look on the lower right-hand corner, just yesterday, Hilton lifted their profit forecast. I think the challenge when you look at public hotel companies and their earnings releases, they tend to be a little bit short-term in terms of vision. And I'm convinced that hotels are really fundamentally long-term investments, right? I believe that when somebody invests in a hotel, they should underwrite and be prepared, if need be, to hold on for at least 10 years. Doesn't mean you're going to hold on for 10 years. If a capital event opportunity occurs in year 3, 4, 5, you're going to take full advantage of it, right? But think about somebody who closed on a hotel September 10th, right? They didn't know what was going to happen the next day. Or somebody that closed on a acquisition of a hotel March 1st of 2020, right? You need some runway there in case some black swan events happen. And we know why, right? Daily occupancy and constantly changing room rates with technology being what it is. That's a beautiful thing in a rising market. It'll kill you in a down market. Real quick, I'm going to go through strengths, weaknesses, threats, and opportunities. I switched it around because I'm an optimist at heart, so I want to finish on a positive note. Right, transient demand, and this is sort of on a long-term basis, transient demand and group demand. I mean, everything's relative in life. Rachel's point is well taken that we're seeing some softening. However, when you compare it to what happened during COVID and coming out of COVID, we've really rebounded nicely. New construction is definitely muted. It's hard to get construction financing, although there is money out there. I'm going to talk about that. There's a ton of debt and equity out there. Some folks say, oh, there's no debt, it's hard to get. It's not hard to get, it's just relatively more expensive today than it was 36 months ago, right? But if you look over a 40-year average, interest rates today are really not that high on a 40-year average. They are high compared to the recent past. These are some examples of, this is all this year, first half of this year, refinancings that have occurred. I mean, it's really quite remarkable. There's a lot of money out there. And the great majority of this is refinancing as opposed to acquisition, but there are acquisition, there are acquisition funds out there as well for the right deals. Right? Same thing with construction. This is all this year, these announcements of construction financing. Now, I'm not going to tell you there's a ton of it out there, and a deal has to make sense, but for the right deal, there is money out there. M&A activity, it occurred last year, it's happening this year. I found the IHG acquisition of Ruby to be interesting because I had never heard of Ruby before. Did anybody ever hear of Ruby before, the brand? No, okay, good, I don't feel so bad. There have been some, the transaction market has slowed, no doubt about it, but there have been some very significant large transactions led by the upper left-hand corner, the JW Marriott Phoenix Desert Ridge, traded for $865 million, or $900,000 a room. And then we've had a slew of trades so far this year at $100 million or more. And then when we look at per room price, right, there's some healthy numbers being paid for select assets. The announcement on the right, that was kind of interesting, the New York Mark Hotel, $1 billion offer supposedly, and that worked out to $6.6 million per key. And in my business, coming up with valuation, appraised values, I hope this deal comes through because then I'm going to be able to come up with any value I want in New York, but it's not going to come through, so don't worry about it. All right, when we look at the profile of who's buying hotel assets, again, this is all first part of this year, a bit of last year. I mean, this is a who's who of investors who know and understand hotel real estate, right? So the fact that they're betting on the sector speaks volumes, in my humble opinion. The AHLA, I don't know if there's anybody here from the AHLA, but I'm personally very grateful for what they do for the industry, and so I think that's a tremendous strength for us. Oh, there's no weaknesses, okay. Moving on to the weaknesses here, pricing power, and I know Rachel alluded to this, has definitely been soft. There's going to be charges now for integrity fees, for visas. I mean, the government does a good job trying to keep foreigners from coming into the United States. Consumer sentiment is definitely softening up, and there's a bifurcation, right? I mean, let's face it, the middle class is getting squeezed. The rich are getting richer, and those, unfortunately, who are on the poor end of the spectrum are getting poorer. And so that is a challenge for not just the industry, but the United States. Back to work, we hear all about it ain't happening as far as I'm concerned. And when you look at Castle Systems and their tracking of swipes going into office buildings, that number's been stuck at between 50 and 55% for as long as I can remember. Again, good and bad, right? It obviously is going to hinder corporate individual travel, but to counter that, there's a need for folks to get together, companies that are working remotely, because there's nothing like face-to-face contact. We all know about the labor challenges in the lodging industry. It's hard to get labor. Insurance going through the roof. We've actually seen situations where folks could not renew their insurance and were in violation of their debt covenant because they just couldn't get it. So that's a real challenge for the sector. It's not going away anytime soon. And then this country is littered with hotels that are starved for capital. And there's the brands all played nicely in the sandbox during COVID. That party's now over. And these renovations need to happen and are the fact that a lot of debt is getting matured at the same time that these PIP requirements are in place, you're going to have a lot of sponsors saying, you know what, I'm done. Get me out of this thing, either recap it or sell it. Anybody in this room, raise your hand if you think we need more hotel brands. There's got to be somebody in the room who thinks we need more hotel brands. No, I agree. Oh, there we go. We got one right over there. All right. I perceive this as a weakness because this is what we do every day for years and years, and I have trouble differentiating between a lot of brands. And candidly, without naming names, I've had franchise sales folks acknowledge to me off the record that within their own brand family, they couldn't tell me the difference between X and Y. So something to think about. Threats, I mean, we all know what's going on with Canadians, you know, rebuffing coming into the United States. It's understandable, but let's face it, it's definitely affecting inbound international traffic into the U.S. That's the bad news. The good news is that Americans are also not feeling that welcome overseas, so a lot of folks are traveling domestically this summer. You know, geopolitical stuff never goes away apparently, and you know, this is just kind of a smattering of some of the headlines out there. I found on the left-hand side, 3 down, U.S. Space Force warns of mind-boggling buildup of Chinese capabilities. I didn't even know there was a U.S. Space Force, but it really is part of the Department of Defense, and I don't know, pretty wild stuff. Unionization, unions are good, bad, they are a fact of life, but the reality is that all things being equal, a hotel with union labor versus a hotel without union labor, it costs more to operate that hotel with union labor, and union activity is only continuing to expand within the lodging sector. Cyber risk is huge risk for the industry, because think about all the data and information that is domiciled on the servers of hotel companies. COVID is supposedly over, and yet there's a headline back in June about some new variant that's out there, razor blades, so I don't know. Bird flu, measles, I mean, but if you think about it, any of this stuff mushrooms up the way COVID did, it could have a dramatic impact on the lodging industry. Rachel talked about this. Short-term rentals are definitely biting at the heels of the lodging sector, as is the cruise industry. Government intervention and government policies are a threat to the sector, and this is just, again, a smattering of some headlines as to the challenges that the industry is facing because of government regulation, led by the bottom one, $30 minimum wage in Los Angeles. I mean, that's a tough way to make business when you're in a market like that. I've heard some investors call LA uninvestable, if that's a word. Climate change, I don't understand why climate change is a political issue. It's happening as we speak. And here we are in Miami, and you know, it's kind of interesting. I'm not an expert on this, but I've read and heard that in 20 years Miami could be, or a good part of it could be underwater. It's kind of interesting when you see all the activity down here. There's a tremendous amount of investment that has come in and still comes in, and yet I've actually asked investors, like, how do you deal with that potential? And every single one of them says, oh, that'll be the next guy's problem. So one day somebody will be holding the bag. You know, another threat that I find this fascinating, supersonic transport. You remember the Concorde? You could fly to, New York to London in 3.5 hours, and then it was gone for 20 years. Well, guess what? It's back. Supersonic transport. It's been perfected in terms of the noise associated with it, the boom, and fuel efficiency, and just, being friendly to the environment. So, rocket engine that'll take you from LA to Tokyo in 2 hours, right? Think about that. Or a $20 trillion tunnel linking New York and London in 54 minutes. That is not a good thing for the lodging sector, right? Because you can get up in the morning, say goodbye to your kids, put them off to school, go to London, have a meeting, lunch, what have you, and come back and be home in time to put your kids in bed, right? Not great for the hotel industry. Opportunities, it's funny, back during the great financial crisis, when that's really when OTAs, online travel agencies, came into the fore, and the hotel sector, which has always been slow to embrace technology, embraced OTAs thinking it was the greatest thing since Swiss cheese until they realized, like, wait a second, what did we just do? We gave up control of our most precious commodity, heads and beds. So we've had that tug of war going on where hotels are trying to, get control of the reservation back, and they are succeeding, and pretty soon the anticipation is that direct bookings will lead over OTAs. Other opportunities are partnerships. It seems to be a big thing in the sector these days. Hyatt with Peloton. I believe McLaren just announced one. No, they renewed with Hilton. And then always, every hotel company and brand is trying to come up with a differentiator. So I found the one on the upper left-hand corner sort of interesting. Hotel offering self-love pods for solo, never mind. Anyway. That's not my thought, that was published. Other opportunities, there's, like I said earlier, a ton of money out there, and this is smattering of announcements of groups that have raised money to invest in the sector. Most recently, Peachtree, who's very active, just announced a $250 million special situations fund. And then there's no shortage of hotels out there that are distressed, not necessarily from a market perspective, but from a capital structure perspective. And what's interesting about this slide is you have some big names on here, Blackstone, Starwood, right? Generally, these guys have great batting averages, but they're not perfect, right? And so they have hiccups every so often, too. So there's a whole slew of deals that have come to the market and will come to the market that are, quote unquote, distressed. Urban markets are really where there's tremendous opportunity, because if you think about it, during COVID, they're the ones that were the dogs that used to be the darlings. They're slowly becoming darlings again, and you could buy assets way below replacement cost in downtown urban markets. Other opportunities, San Francisco. I just want to talk a second about San Francisco. It's getting, in my humble opinion, getting a really bad rap. Yes, it's a tough market, but I also think that's the place to put money right now. San Francisco is a beautiful city. It's a gateway to Asia. Unless you think it's going to literally fall into the Pacific Ocean, I don't think it's going away. It's going to come back. And you look at investors like EOS, right? They're smart and sophisticated. They've made several bets in San Francisco, buying assets at fractions of replacement cost. Within 10 years, you mark my words, those will look like great opportunities. The hotel business is expanding, trying to leverage brand equity and getting into safaris, cruises, et cetera, et cetera. Other opportunities, the hotelization of commercial real estate as well as multifamily. There's a building in Manhattan, a brand new office building, One Vanderbilt. It's an amazing building. It's an office building, but you walk in there and you attend meetings in there and meet folks. You feel like you're in a hotel in terms of the way that you get handled. And so it kind of amazes me that the hotel industry has not gotten into the business of managing office buildings, because who knows better how to be hospitable than hotel folks. Anyway, AI, I don't know much about AI, but obviously there's a lot of talk about it, and it's happening as we speak, and there's going to be tremendous opportunities. There are tremendous opportunities in the sector, and we just had the first AI-powered hotel open up in Las Vegas, the Autonomous Hotel. Mercedes is working on a concept to create a car that the inside feels like you're in a luxury hotel room. I mean, just really kind of interesting stuff. Hilton is exploring out-of-space opportunities. I'm not sure I'm going to be around when that actually happens. I hope I am. But and then my final thought is, Chris Nassetta, this is not a public service announcement, but he's one of the smartest guys in the sector. And as we were coming out of COVID, if you read the yellow highlight at the bottom, it really speaks volumes. And I concur with the fact that, listen, as we went through COVID, the world obviously changed and people's perspective on life changed, right? And they realized that life can be short, so enjoy it while you're here. And even pre-COVID, it was every American's God-given right to go on vacation, whether they could afford it or not, right? And there's no doubt about it. People are traveling more and more and more. It's not going away, and that's great for the hotel industry. Thank you very much.
Okay, thank you, Dan. While John's getting tea and John's slide's getting teed up and so forth. By show of hands, how many of you in 2030 will be taking that 60-minute jet flight from, I assume, LaGuardia to London? Well, the 5 of you that raised your hands, a common attribute is you're a lot younger than I am, because I'm not doing it. I'm not doing it. Just another couple of quick thoughts. And Rachel and Dan have both touched on it, and I suspect John may touch on it as well. A question for the audience. When you're uncertain about something, what do you do? Ask questions. Any other thoughts? Wait. Who said wait? You wait. I agree. Boy, you're 2 for 2 today. That's good. Yeah, I mean, if you cannot do anything, I would argue that the normal human response is let me just wait until whatever it is I'm uncertain about goes away or at least begins to dissipate so I can begin to figure out how I want to move forward. And again, we've talked about it a lot already, but there's a lot of that out there, but it does seem to be slowly dissipating. The third question is, for the students in the room, what do you need to have if you want to make a trip away from home? Don't think too deeply. These folks know I'm not capable of asking hard questions. Huh? Money, so resources, right? And what? Those, you got it. This table got it right here. You need to have the economic resources to make the trip, and you need to have the time. And I would argue, if you look at the demographic profile of not just the U.S., but many markets around the globe, what you find is there's more and more people that have those 2 critical resources. Not everybody, obviously, but a growing number of people are going to have the ability to make that trip away from home because they have the money to do so, and critically, they have the time to do it. So, John, with that, I'll turn it over to you.
Great. Good morning, everyone. My name's John Lancet. I'm the Senior Managing Director of HVS. I'm based here in Miami. I focus on feasibility studies and appraisals. I'm our practice leader for the Southeast region and the Caribbean. In a couple months, I'll be celebrating my 30th anniversary with HVS. I'm a graduate of FIU, the FIU Hotel School here in Miami. And Rachel had stated earlier that she started in housekeeping, I believe it was, and I worked my way through school, and I started as a reservations agent back in the day, I think, when you would call on a phone and talk to a person to make a reservation. So that was kind of my start into the industry. So as you all consider investment in the hotel space, I'm going to provide you with some metrics of hotel transactions, specifically of limited service hotels in the eastern United States. And the metrics I'm going to provide you with are for individual hotel transactions, so they exclude portfolio transactions. So here's a slide this is a 10-year perspective for the eastern U.S., and it shows the current average sales volume and this is specifically for limited service hotels. So the sales volume is now approaching about $5 billion in sales, and that's compared to about $4 billion in sales between 2015 and 2020. This provides us a perspective of the overall transaction volume in the eastern United States. It's about $4.7 billion. The average price of limited service hotels in the eastern United States was roundly $99,000, and the average cap rate for these transactions was 9.6%. This is a 10-year perspective for the Southeast region, and it indicates that sales volumes are settling in at about $3 billion. In the Southeast, in the last 4 quarters, 350 hotels traded at an average price of about $97,000 a key, and an average cap rate of 9.6%. To give you a perspective of the overall sales volume in the eastern United States, Sales transactions in the Southeast represented about 62% of the sales in the Eastern region. This is a snapshot for the Mid-Atlantic. It shows that sales volume has been relatively choppy, with sales volumes falling short of about $1 billion. For the Mid-Atlantic, 98 hotels traded at an average cap rate of 9.6% and an average sales price of $79,000 per room. The Mid-Atlantic transactions represented about 17% of the sales volume for the Eastern United States. Here's a snapshot for the Northeast. It shows that sales volumes are settling in at about $1 billion. And in the Northeast, 86 properties traded at an average price of room of about $140,000 and an average cap rate of 9.5%. So I shared these cap rates. These cap rates for the region are elevated. You know, we're in the mid-9s. And then just for perspective, the sales volume in the Northeast compared to the Eastern United States is about 20%. I wanted to give you just a highlight of where the money's going. The hot markets in the Southeast for transactions are Atlanta, South Florida, Nashville, Tampa, and Charlotte. In the Mid-Atlantic, it's DC, Philly, and Pittsburgh. And up in the Northeast, it's the New York City Metro, Boston, and New England. I want to close with just, I ran this data or this query recently. So one thing is the buy, right? And I echo Rachel's sentiment as to buy sensibly, right? You're going to make your money on the buy. But these price points that I gave you on a per room basis, you have to consider that you're going to have to incur some additional expenses for PIP. So as the brand mandated improvements to the property following the acquisition. So those baseline, the price per room that I provided you is the baseline case because your cost basis will have to include that PIP. So what I did review was, I looked at Florida, and I looked at Florida to say, okay, of all the investment dollars that are coming into Florida, are we putting more money into the acquisition of existing properties, or are we putting that money into the development of new properties? And it's clear we're spending more money on the development of new properties in Florida than the acquisition of existing properties. And the top 5 markets for new development in Florida of limited service hotels, Orlando is the top market. It's followed by Jacksonville. Then third place is the Fort Myers Metro. Fourth is Tampa. And the fifth is the Panhandle. And I got to say, I'm starting to get quite a few inquiries regarding the Panhandle. It's pretty hot right now. So as you consider your investments in the hotel space, I'd love to be considered a resource for you. Feel free to reach out to me. Thank you very much.
Hey, thank you, John, and thank all the panelists.
Thank you.
One thing I'd want to point out, and then also to give our panelists a heads up, I want to get some, hopefully, questions from the audience, but I want to conclude with each of you, if you were in the student shoes and getting ready to start your professional career in our industry, either what types of opportunities do you think you'd look for, or long-term, what do you think the outlook is in terms of career opportunities in our space? I would point out on the short-term rental questions, everybody talked about it, it's at least, one of the ways I look at the industry is it really starts with demand, or it starts with the customer. If you don't have any customers, nothing else matters, right? So when we look at the short-term rental space, and Rachel had a lot of the data up there from a firm called AirDNA, if you took the number of rooms sold in traditional hotels, added to that the number of short-term rental units that were occupied on an annual basis. Early in our career, the short-term rental piece was well below 5%. It's only a guess because we don't know, okay? But when Airbnb started and so forth, it began easier to understand what was out there. Today, demand in short-term rentals is 15% of all demand for rooms away from home. So you think about that, it gets back to, so the customer base continues to grow. And I look at that as a good thing. It's a competitive threat to traditional hotels, but something we need to be sensitive to. So, questions from the audience? Yes.
Oh, hello, everyone. I'm Jasmine Wilkerson. I'm a student at Morgan State University, hospitality management major. And my question goes to when someone is trying to develop or they're looking for an area of where they want to build their hotels. I know that you were stating in the Miami area in like 30 years, they were like, oh, Miami's going to be underwater. Do you think that is an effect on someone that's trying to look at the longevity of how their hotels will be developed or owned in that specific area?
Yeah, on Dan's point, earlier point, you know, and on the underwriting of an asset, whether it's the development of a new one or the acquisition of an existing one, is kind of looking at the 10-year horizon, right? So it's really understanding the demand generators in that market and the upside of those demand generators and their ability to put heads on beds at the end of the day, right? But assuming that 10-year holds, right? You want to make sure there's stability in those demand generators, so then after that 10-year holds, you're able to sell out to another prospective investor. So I think investigating the demand generators thoroughly, understanding their growth and their stability, and understanding the risk of that potential exit is something you would have to consider. Yeah.
Thank you.
I would also say it's very easy to just call your insurance broker and get a quote before you even begin due diligencing the project. I mean, if you can't get insurance or if it's cost prohibitive, then move on right away. It's a free, 10-minute phone call. Yeah?
By the way, one of the nicest people in our business happens to be sitting here, and I'm going to ask him a question next. So just so you're ready. Okay.
Hello, my name's Amaru. I'm an incoming third year at BU studying hospitality real estate. And my question is, based on current markets like capital markets and interest, how is that being affected by asset managers today?
I'm sorry, could you ask that one more time? I didn't catch that, the back end of that. Yeah.
Yeah, so based off current markets like capital markets and interest rates, I understand that it affects deal flow for hotel owners, but I want to know how that affects asset management companies.
Asset management companies. Go ahead.
Want to take a stab at that?
I mean, asset managers can help you recapitalize your asset if that's, they will give you an opinion on your capital stack, on refinancing, and is that what you're asking?
Yeah, but I'm asking, how does that affect their line of business?
I'm not sure it would, other than, that is a service that your asset manager traditionally would provide you with. Advice not just on the operations, but on the capital stack.
Yeah, but does that I know that it affects deal flow for the hotel owner, but does that affect their line of business as well? Because
It would be more in demand because it can provide consulting to what other options are available.
Yeah, my sense, you might be covered, if I was going to have a career in asset management, given market dynamics in your outlook, is that a field that we think there's a lot of growth potential? Is it contracting, or is it doing something else? Is that fair?
Yeah, I mean, at a high level, I think we're talking about elevated interest rates currently. On a historical level, it seems to be reasonable, but when you have these higher interest rates, it's impacting your margins to the owner, right? So then there's more opportunities, or there's opportunities for asset managers because those hotel owners are starting to feel the squeeze, and they want those asset managers to help improve the operating margins of the hotel. So I think there's opportunities there. We can talk more about it offline. Yeah, yeah.
I would just make sure also, though, that you have a good, solid experience on site. Like, I think that would, if you're looking to enter asset management, I think having on-site experience is going to be necessary.
I would just add that we're seeing more, as time goes on, more and more institutional money coming into the space on the debt and the equity side. And listen, a lot of these folks know about real estate, and they know enough about hotels from an investment perspective, but not necessarily from an operational perspective. And let's face it, they need somebody to represent them, owner's representative, to oversee the day-to-day operator to make sure that they're maximizing revenues and minimizing expenses. And the last thing I would say too is, I think that's a good question that you asked. I always think about artificial intelligence and how that's going to maybe ultimately replace every human's job. And so I think it'll be a longer time period before AI can replace what an asset manager does as opposed to a reservation agent.
Okay. Vinay is, beyond just being an incredibly nice human being, is a leader in the industry. He's got a lot of long history of success in our business. So I'm just curious, what are you thinking about nowadays?
You know, I'm just standing up, I don't talk over here. I don't know what I'm thinking these days, you know? Every time I go to a conference and I hear Mark, you know, this happens today, next week I'll be at a different conference, or a week from now, or whatever else, and you get a different thing here. But I think that at the end of the day, and I know that you guys are all wanting and interested in the hospitality industry, and I was telling somebody yesterday that it really is a fun business, you know, and you got to look at it in that perspective. And yes, you'll make money, and money is important, and don't get me wrong, you got to pay your bills and everything. So, you know, just when you come to these conferences, and what am I thinking right now, and I'm sitting here in the audience and saying, hey, look, it's going to be a good business. It is, and I've been in the business for 30 years. You have your ups and downs. Sadly, the downs these days gets worse and worse. I still remember my first one was 9/11. Then the financial crisis in 2007-8 got even worse. And COVID was the worst of the worst. So I'm like, how bad can it be? I mean, we've already survived all this stuff. So, but my outlook is positive, but you just got to be smart. You just can't act dumb. I hate to say it like that, but you can't be acting dumb.
Great, thank you. Panelists, if you would, if you were a student getting ready to graduate, start your career, would you be happy today? Would you be sad today? What kind of opportunities might you be looking for? Rachel, can I put you on the spot first?
Yeah, sure. I think what's great about hospitality is that it has over 100% turnover a year. And so if you're good at all, if you're willing to put in above average effort, you will rise to the top very, very quickly, because there are vacancies every single day. So anytime you show up to work, somebody's not there, put me in, coach, I got this. I'm here, let's do it. I mean, I think I rose to GM in 3 years, maybe 4 years. I mean, what other industry can you go from housekeeper to GM in 5 minutes? So turnover is your friend, as sad as that sounds, but you better be ready to work. Every night, every weekend, you are there to hustle with a smile on your face. I've got this.
Thank you, Rachel. John?
It was interesting. I heard you say you're in hospitality management, and you had mentioned from Boston that you're involved with real estate, right? And I think for the students is, yes, part of your curriculums is going to involve hospitality management, the management of hotels, but don't lose sight of the fact that hotels are real estate investments, right? And there's a lot of opportunities in the analysis of these types of investments. So open your eyes to the opportunities that might be beyond just the management of a hotel, and looking at it and possibly analyzing the real estate and the values of those assets.
Thank you, John. Dan?
So actually, I realized that I didn't even introduce myself because Mark had asked the lady over there, who are you? So who am I? Anyway, and I didn't give any background, but I graduated hotel school, worked for Hilton for a number of years in operations at the New York Hilton Hotel. Midtown Manhattan, 2,000-room property, amazing learning laboratory. I went through every sub-department within the front office, every sub-department within food and beverage, and then ultimately got kicked up to the catering sales office. And after a couple of years in operations, I had an epiphany in that I figured out that I love the hotel business, but I did not want to make a career working in hotels. However, listen, there are lots of folks who do what we do and are on the investment side, asset management side, who've come into the space without a hotel educational background and/or hotel operational experience, many of whom have done very well. So it's not a requirement, right? But it's a real specialized property type, and I would encourage any young person who's interested in the lodging sector, whatever you want to do within the sector, outside of operations, right? Get some operational experience, because there's nothing like, I mean, actually working when I graduated, I graduated Cornell University, Ivy League school. The first thing I did at Hilton was, the day after I started, the gentleman who ran the beverage storeroom, 3 stories below grade, was going on vacation. Big burly guy with the belt and all, and I was like this skinny, scrawny kid. And the F&B director said, he's going on vacation for the next week. Go spend the day with him, and then you're running the beverage storeroom. I had no idea what I was doing. Anyway, hotel operational experience, I think, is important. I would also just add that 2 things in terms of career. We all have, everybody in this room, is our reputations. And reputations they take a long time and a lot of effort to develop a good reputation. It's incredibly easy to destroy your reputation by making one wrong move. So I'd be focused on that. There was one more thing I wanted to say. Yes, failure. I used to not do very well with accepting failure. And then as I matured, I'm still maturing, I came to realize that failure is okay, and you learn from your mistakes. And the goal is not to make the same mistake twice. If you do, okay. If you make it 3 times, you're kind of out. But learn how to embrace failure and recognize that those are learning opportunities. And I have 2 grown boys, and my wife and I, raising these boys, always said to them, it's okay, you fall down, you get up, you dust yourself off, and you go at it again.
I would also just say very quickly, you guys are on the right path. I mean, it's no surprise that all 3 of us went to hotel school.
Actually,
Like, we
4.
started in hotel school, yeah.
As did I, many, many years ago. Please join me in thanking our panelists for their insights.